Okay, so we definitely value uh, companies that are focused on a niche as part of their overall business model. Like we shy away from entrepreneurs and management that looks to what we call boil the ocean. So if they're trying to become the next Google or Facebook or something like that, we won't really be that interested. But if they're serving like a hyper niche and we feel that their management has the right domain expertise, entrepreneurial experience, track record, then we will value that more. We also take a personal interest in the companies that we deploy capital into, which is very common of venture capital firms. By definition, we get involved with the management of the company. So if you look at ChargerQuest, for example, an electric vehicle infrastructure company that's in our portfolio, I took on the role as a chief financial officer. So I'm obviously getting very much involved with helping drive the company from a cash flow management perspective, but also helping the capital raise funds. I raised over $4 million for the company. I drive a Tesla, and I believe in the overarching vision of the EV industry. So that was an easy decision for us to deploy capital into this opportunity. And if I could just talk about the personality standpoint of the entrepreneurs, because remember, our company we invest in earlier stage businesses, so you have to really believe in the people managing the company and being able to execute on their vision, which is a little bit different than a later stage company because their vision has already somewhat been realized. So the risk is a lot higher when you invest in an earlier stage company. So one little kind of tidbit that I look for when I start meeting entrepreneurs and getting to know them, and I start considering, is this the type of person I want to work with, is how interested they seem to be and obsessed with their company and their vision. So if I start getting to know an entrepreneur and I feel like they have a massive OCD about electric vehicles or medical AI for mental health or something like that, to the point where if I were to go for a coffee with them, they would talk nothing but that particular thing. That's a small indication for me that they would have the aptitude to just keep pushing forward with their vision until they uh, see it kind of come to fruition, essentially.
Okay, thank you so much. Yeah, so let's talk about something that's a little different, but it's also equally capital intensive. That's sports investments. So, Suraj, your firm has strong focus on sports investments, particularly in the NBA and European football. And with recent changes to the NFL ownership rules that basically allow minority private equity investments, along with the rising valuation of other major leagues, do you anticipate increased investor confidence and sentiment in this type of an asset class? Yeah, definitely. So we're very bullish on the sports industry. We were actually just chatting about this before we came in here. Sports has been a really interesting asset class because a lot of these teams were purchased by owners in the 70s and 80s. That puts 10% of their net worth into a team and 90% into their operating company. And now fast forward to 2019, and now 99.9% of the net worth is in the sports asset, and 0.1% is an operating company, which didn't really prove to be all that problematic up until 2019. And you had some minority owners, right? You have someone that owns 5%. They have courtside seats, whatever, and not really, no real liquidity, right? Like if you own 5% of the Chicago Cubs, other than having good seats and maybe getting celebrated the team if they ever win, you don't think about anything else. The thing is, there was a lot of talk about given the massive asset and very little liquidity that was available, there was a lot of talk from 2015 to 19 about unlocking some capital because there was a lot of funds that wanted access. And then COVID hit. And all of these teams that typically generate a lot of cash were suddenly in these gigantic cash holes. And most of these owners are asset rich and cash poor. So they didn't have $100 million to put into this team because they had to pay stadium costs. So that really kind of expedited the conversation. So the MLB was the first to bring liquidity, followed by NHL, NBA, MLS. European soccer is now, kind of coming on board. The NFL, I have to give them credit; they were brilliant because they purposely waited to the very end to see